Hey, Kevin here, top 1 financial advisor, two-time author, one-time bestseller, and we are here to talk about the stock market. As you've noticed, really over the last few weeks, pretty much all of this year, you've noticed a lot of the cloud computing companies, a lot of the bigger tech names just have not done well this year. We're experiencing what's called a rotation, which means that people who were heavily invested in tech last year, making a lot of money last year, said, look, I'm tired of this. I'm going to take this and go somewhere else. One of those places is infrastructure stocks. That's where people are going. Other people are just pulling their money out of the market altogether because of the fear of inflation, and that is starting to come true. A lot of people have already seen higher gas prices. And you've got other people saying, look, I'm going to forget all this stuff. I'm going to crypto, Bitcoin, Ethereum, Dogecoin, and stuff like that. That's where people are moving. Now, anytime that people have a strong rotation doesn't always mean that those stocks have not been well. So I went through, scoured the interwebs, and found 6 stocks that I think are undervalued. Now, when you talk about an undervalued stock, it all depends on what you value it at, whether or not you think that company deserves to drop. So when I say undervalued, personally, I'm not talking about I think the stock needs to be at X price. My only thing is I think that this company is worth a lot more than what it is right now. And I think if I can get in on the cheap, I can see a pretty big profit. Now, the other thing here is that anytime, especially when we're talking about right now, when we talk about value, it could be a while before you start to see value pay out. Value is not something where I come out here and say, look, I think this is going to be the greatest play for 2021. I think it's going to be the greatest plays for, the next 6 months. When I talk about value, and I'll describe this in some of these companies, if I were to get into it, I'd be willing to stick it out 18 months, year, 2 years, or more. And that wasn't in order. So a year, 18 months, 2 years or more. There we go. And stick it out there because I think, again, the market will start to realize like, hey, this company is still very good. I don't know why it dropped 15%. A good example of this, and my son, we've talked about this before. My son owns Nike. We got it at $109 a share. Pandemic started to hit, and this was like late December 2019. It dropped down to $88 a share. It dropped down to $65. I think it's the lowest that we bought it at, and we just kept buying. Today, Nike's at $136 a share, but it took time, right? We're talking December-ish 2019 to 2021. It took time. Okay, so I'm not telling you that you should just jump in these companies and expect a big profit right now. I think it's going to be a while before you start to see something. But when you do, based on what we know from the tech sector, these things can accelerate pretty quickly. So it could be end of this year, it could be next year. In some cases, it could be the year after that. Although I don't think it's going to take entire 2 years for you to see some big gains from here. But these are just what I personally see. What you invest in, totally up to you. So I'll go through the list, tell you why I like some of these and what's going on. So I'll start off the list. And actually, let me pull up the whiteboard so I don't have to stare here at my notes, scribble down on a piece of paper. We can scribble together. Here we go. All right. So we got like the chalkboard feel here. So six stocks, 6 undervalued tech stocks. I don't know why I read it that way. It looks more like a G than a 6. I don't know if that's going to help, but there you go. 6 undervalued. It should be one word. We'll just put a hyphen there. 6 undervalued tech stocks as I see them today, which is May 10th, 2021. All right. So the first one is Adobe. Now, you may be looking at me and saying, why is this man putting up Adobe? He don't like Adobe. I don't like Adobe. But again, when I got into Adobe, I was expecting to see a profit within the next 6 months. Now it is undervalued. I have the opportunity to either keep Adobe for the long term, which I think there will be a profit there, or I can switch it out and see what's going to get me a profit now. And that's the question. Anytime that you're talking about a value stock, you're really comparing, do you expect a bigger profit in the long term, a year or more, or are you looking for a profit now, 6 months, 3 months? And my goal when I got into Adobe was to get a profit now. I did not expect Adobe to be a value stock, but now I think it is. So over the last, and we'll do this, YTD is year to date. And it looks more like a P than a D. And then we'll do previous 6 months just to give you an idea of where the company is. I'll be writing obviously 6 names, so hopefully it doesn't get too convoluted. But year to date, it's down 4%. Over the last 6 months, I think it's down 1.75%. Actually, no, it's up 1.57%. So not a whole lot. But here's the thing: when it comes to all these tech stocks, and I'll pull this down real quick. with all these tech stocks, again, especially with the ones that we're listing here, people are moving out of them, right? A lot of people are, I think, overreacting in that the world is opening up. Maybe we're not going to be on Zoom as much as we were before. Maybe, but that's Zoom. Okay. Some of these companies aren't going nowhere. A company that's on the list, Salesforce has been punished since they really made the Dow Q3 or Q4 of last year. But Salesforce is not going nowhere. Whether you work at home, whether you're going back to work, world open, world closed, Salesforce is not going anywhere. So a lot of these companies aren't really deserving to drop. I don't know why people are selling them, but again, that could be a value to you. So that's kind of how a lot of these companies ended up on this list. In that there's no real reason as to why it dropped. Whether world open or closed, they're still a solid company and they have financial results. They're not losing any money or losing more than normal. And some of these are actually quite profitable. For example, earnings for Twilio, they saw a 62% jump in revenue from Q1 of 2021 versus last year of 2020, which that some of that includes the pandemic. You made 62% more, yet the company dropped. Another company here, ServiceNow, they do like business flows and stuff. I have a very, very small holding with them. Their Q1 revenue is up 30% from this time last year. But again, the stock is down. That to me screams value. Like, man, you made more money, but the stock fell. This ain't gonna last forever, right? So let me go ahead and kind of continue snapping up some shares now at a lower price. And just like Nike, hopefully things will improve, which we think they will because it's in tech, because they are doing well, that I can get it at a lower price. So that's the logic as we're going through here. So let me go back and continue here. Now, again, I own Adobe. My goal for Adobe is not to hold it for that long. Okay. So we'll see whether or not I keep it. But things have improved very relatively recently, so it's not as bad as it once was. All right, so we got Adobe, then we got the company I just mentioned, which is ServiceNow. Over the last year to date, rather, they've been down 9%. Over the last 6 months, they were down 3.68%. Now, again, even though they were down, they still increased their revenue by 30% year over year from quarter over quarter, however you want to say that. From 2021, the first 3 months, they have made more money in 2021 than they did in 2020 for the first quarter. That's really good compared to what we expected. And again, based on what their business does, they run like business flows and help people to like organize their business in the cloud. Look, that's not going anywhere. That's not going anywhere. So it looks like a value to me. And again, it has a lot of institutional support as well. A lot of these bigger tech ETFs and funds, you'll notice Adobe is probably going to be in there. ServiceNow is going to be in there, as well as a few other names that we're going to mention. So that's the second one. Scrolling down, we have got, and I know we've talked about this one. This is CRM. This is Salesforce. Salesforce has been relatively controversial. Year to date, they're down 2%, which ain't bad. Now, that's really good for me because I'm like, of all the things that are down, I mean, even Kathy Wood's ETF is down like 30 something percent. So if I know the entire tech sector is down, with Salesforce not only being down 2%, that's not bad. That's not bad, right? But if we go back to the last 6 months, I'm looking at 16% drop. Not something that I like, but again, Salesforce ain't going bankrupt. It ain't gonna matter whether or not the world is open or closed. Every place I've worked for the most part uses Salesforce, and that's really not going to change. Nothing has happened with Salesforce that you can really point to and say like this company deserves to drop 16%. It's not like an AMC or something where somebody is taking up market share and really threatening the company. For some reason, people are just rotating out of the stock. People will rotate back at some point, but this I think is an opportunity if you are a long-term investor. If you are trying to get stocks that are good in quality but low on price, this is an opportunity for you to do that. Again, it all depends on, I want to look you in the face as I'm saying this. So I'm looking you in the face because I know we've talked about Salesforce before. If I am looking to make money between now and the end of the year, I'm probably not going to invest in Salesforce. But if I'm trying to set myself up for 2022, maybe 2023, yes, I personally would invest in Salesforce. So it really depends on what your goal is. Are you trying to make money between now and December 2021? Probably not for a Salesforce. If you're looking to make money 2022, 2023 and beyond and get you like a good chunk of something that we think is still going to be here, which I think it will be, this will be your opportunity and you can kind of average this out while it's relatively low. So I just want to be real clear. Don't jump in here and say, yeah, I bought it and then it didn't work out by the end of the year. That's not what we're expecting. We're looking long-term here. All right, so let's go back to our list. I gotta emphasize things. All right, so we got CRM. Now we've got two names that are very popular that I've been high on for a while, and this is still tending to hold up. So we got PayPal, PYPL. They are up 8% this year, which look at that. These are the ones that we really, really focused on. And it is up 37% over the last 6 months. Again, these are good numbers. And you already know what's coming here. Oops. You got Square. I don't know why I keep making eights. Here we go. We've got Square right behind PayPal at 7% year to date and 26% over the last 6 months. Now, interestingly enough, we had talked. You can go back and watch the entire video about what we did between Square and PayPal. Why I chose Square, why I bought PayPal for my son. Both are doing decently well, not as well as they did last year, but decently well compared to the rest of the tech sector. As you can see, they're the only ones positive on this list so far. We are not 100% sure if this is going to continue for the rest of the year. However, if you're looking at tech, this is one of the few places that you can still get a positive return. So we were on the money, at least so far, about both Square and PayPal. I said both were good. I thought that Square would do a little bit better. It's still very early. It's only 5 months out of the entire year. In either case, I am a winner in this instance, and I'm going to continue to hold them. Hopefully, I think one of these will become more of a longer term investment for me. And as I'm looking to switch some things out for 2021, come June, maybe PayPal will show up, maybe not. We'll see. All that stuff is wide open right now. So Square and PayPal, we've talked about those before. You know the deal with those two. And then we're going to add two new ones, or most of these are new, but two that I have not covered before. And maybe we can do a versus episode because I want to learn more about these as well. You've got PF, PT, and let me make sure because I don't want to say this one wrong. It's like First Trust or something like that. I'll pull it up on my phone. But as I'm doing that, they are up 26% year to date, which is astounding compared to what we see here. And they are 72% over the last 6 months. Now, I'll also be cautious here, right? PF, let's see, PT. So I'm looking it up as well. Proofpoint is the name of the company. So if you look at their chart, you'll notice that there's like a huge spike. Let's see what date that was. It's going to give me that date on April 26th, where the stock just basically just shot straight up. So that may have been an anomaly. I don't know why yet it took that big of a jump, but when you count that in there, they're looking. And it depends on what app you're looking at. So year to date, they're up 26% over the past year. Over the past 6 months, they're up that 72%. So interesting results there. Just something for me to look into. So we'll, if y'all want a versus episode with that and something else, let me know. Or if y'all just want me to cover it in and of itself, feel free to let me know. So I'm looking at it on public. Again, the company's Proofpoint. They engage in provisions of security as a service that enables large and mid-sized organizations worldwide to defend, protect, and archive and govern their most sensitive data. So that makes sense. We just had a major hack on the East Coast with a pipeline or something like that. I haven't really dug into it enough, but every company got security and cyber issues. So makes sense that they would be around. Again, regardless of what's going on, that's a company that you're going to have. Same with Salesforce. You could argue PayPal and Square too. It ain't going to matter what people are doing. These are companies that are going to be here because we have to have them. Something like Proofpoint is very, very important for what they do. All right, so let me continue to move on. We've got one more. This is DBX. This is Dropbox. You know what it is with Dropbox. They're up 11% over the last 6 months, and 31%. I keep getting these mixed up. So 11% year to date. Sorry about that. 11% year to date and 31% over the last 6 months. That's Dropbox. Dropbox, obvious reasons, like, again, they're cloud computing. They hold your data. They hold stuff for you so that you don't have to, one, print stuff anymore. But obviously, store information in the cloud for you. They've got a lot of competitors. That's one issue that they do have. But again, you're up 11% based on what we see here. There aren't many. And you can go for like Tesla and others if you want to consider Tesla tech. Most people do. I have a controversy there. We'll get to that later. But based on where tech as a entire sector is, when you look at the bottom, really this half of the list and down, these are probably where people want to be the most because they're making you money now. So again, this don't mean that the rest of the year is going to be the same. You obviously want to take care of that and know that. But if you're looking for long-term value, I think anything on this list is likely pretty good. Which ones am I looking at the most that I don't already have? Now, I already own ServiceNow. I own Adobe. Let's see if this didn't freeze on me, hopefully. And I think it did. Okay, there we go. We're back. I'm not sure what happened. All right, so I own ServiceNow. I do own Adobe already. I own Square. So this one, Proofpoint, is probably going to be the place that I look at. I want to know why it has a huge spike up, because I don't want to think that this is this is how the company acts on a normal basis. That could have been an anomaly. I don't know what it was, right? So I want to see why it took that huge jump. So of these names, that's probably the place I'm going to look at. I'm curious to see what's going to happen with Salesforce. Again, depends on if I'm looking to get it now and hold it for 2 or 3 years, or or not. But of the list that I don't already own, PayPal for obvious reasons, right? We've already talked about that. But Proofpoint is probably going to be the place that I look for, because again, I'm looking for what's going to do well between now, or really June, and the end of the year. Based on what we see, I think Proofpoint might be that one, but I need to do more research there. So of all of these, though, all of them I think will be up 2 to 3 years from now. I have no doubts that they'll all be among the top performers, or at least above the S&P 500, because generally they tend to be that way. And these are companies that, again, are still growing, even though even though people have been selling out of them, still growing, still usually over the S&P 500, are companies that you're going to have in some capacity in either way. So wanted to make sure I gave you guys that. So 6 tech stocks that I think are undervalued, that you might want to consider adding to your portfolio, or at least keeping your eye on and researching before you decide to invest. So that's all I got for you guys today. Again, make sure you click the link above to pre-order From Burning to Blueprint, Rebuilding Black Wall Street After a Century of Silence. It officially releases on the 18th of May. So you're going to hear a whole lot more about it. I've been saying that a lot, but you will be here pretty soon. And that's it for me. I'll talk to you guys later.